Afternoon portion, we welcome now Gordon Fellows, president of the Mississippi Bankers Association. Hey, Gordon, good to see you.
Gerard, good to see you. Thank you for having me.
You bet. So I've been talking a little bit about this this rule is scheduled to go into effect, issued by the Consumer Financial Protection Bureau, part of Dodd-Frank, the law passed in the wake of the banking crisis of '08, that would require financial institutions to collect lots of personal data about their customers' loan applicants specifically. And I believe the House has now, the U.S. House, has in fact passed a bill, a measure that would repeal that. Not sure that it's going to get passed in the Senate or what the status is. I believe the president, correct me if I'm wrong here, Gordon, has said, I'm going to veto this deal. I get that right?
No,
Where are we?
You're exactly right. So, and an important distinction here. Congress has a process called the Congressional Review Act process, where they can promulgate a resolution to undo or nullify a rule, which is different than, striking the statute that created the rule. So two different processes to undo a rule. In this case, we're talking about a Congressional Review Act resolution that nullifies the CFPB's 1071 rule. It does not repeal 1071. So there would still be a rule at some point, right? So two different processes. But where we are, right, is the Senate passed it in October. And they passed it in the middle of when the House was electing a new speaker. So it didn't get a lot of attention because all the political news was around the new speaker. And then the Senate passed it in October. The House passed it last Friday, right, which was also the day they expelled Representative Santos. So, again, that was the political news of the day, right, the expulsion, not the fact that they passed this regulation or this resolution to undo a regulation. So now it's at the White House. President, I guess one of the unfortunate things sort of about Dodd-Frank is it was a overly partisan sort of thing, right? When it passed, it was very a very big piece of the Obama administration. It's kind of a legacy piece, and so I don't think the Biden White House wants to undo anything that's part of President Obama's legacy. And so even though like Joe Biden's favorability rating with small business owners is down to like 30%, and it's been as high as 40, 45. He's way down with small business owners. And you would think that would incentivize him to sign this resolution into law and undo the rule. I don't think he's going to. I think it's going to be vetoed, and then the rule's going to go into effect. And so there's a chance that it gets litigated. There's actually a court case right now related to the Consumer Financial Protection Bureau that the Supreme Court heard oral arguments on earlier this year. And because that case is pending, a couple federal judges, one in Texas and one in Kentucky, have both stayed the rule until that other case gets worked out. But at some point, it's likely that the 1071 small business data collection rule will go into effect. And so I think it's really important for Mississippi small business owners to recognize when your bank starts asking you questions that you're not used to, it's not because they're asking because they want to know, they're asking because they have to. And this process is probably going to slow down the loan approval process, right? Traditionally, if you're a longtime customer of a bank, you might have a sort of standing agreement that if you're a retailer, for instance, and you need some credit to buy some new inventory, you might just be able to make the phone call and sort of say, hey, can we turn on the line of credit? I need to go on a buying trip. And or if you're a contractor and you've got a job and all your cash is tied up in materials for that job and your saw breaks or some of your equipment breaks and you may need to borrow a little bit of money to go buy some new equipment to complete the job, right? So those type of decisions traditionally have been really fast, right? The bank with an existing customer can make that determination almost immediately. And this data collection process now, it's going to slow that process down. So that's really sort of my message to small business owners and the folks that work for small businesses. The process is going to change when this rule goes into effect. We don't know when that will be because there's this litigation, because there's this legislation. But even if the president signed the resolution into law and nullified the rule as it exists, the statute would still be there, and eventually another rule version of the rule would be promulgated. Does that make sense?
I
I kind
got
of
you.
covered.
Yeah, yeah. No, it does. And I just want to say I appreciate you squaring away the chronology there. I had it backwards. I wasn't sure, but I did see that they passed the House. I wasn't aware it had already passed the Senate. So thank you for getting that information out there. But yeah, I still believe the president, and all indications from the Biden administration are that we're going to veto this thing. And I think largely due to the political element, as you point out. And so here's a question, Gordon: was this rule? Did it just kind of stem from the overall, I guess, theme of Dodd-Frank, or was this specific language in Dodd-Frank that then the CFPB said, okay, based on what they kind of are looking to do here, we got to put this rule in place? Because that happens a lot, as you know.
Right. Yeah. No. So well, two things. Just for a point on the Senate vote, it was actually pretty bipartisan, right?
Saw that.
Five Democrats voted with the Republicans, so you don't always see. I mean, five is a tenth of the Senate Democratic caucus, right? So it was a pretty bipartisan vote in the Senate, which was a good thing, I think. But yes. So to your exact question, this rule was part of Dodd-Frank. It was Section 1071 of Dodd-Frank, right?
Okay.
3 pages of legislative text, and that 3 pages of text laid out a rule that requires lenders to collect 13 different data points. Now, that 3 pages of text and 13 data points turned into 890 pages of regulation. And those 13 data points turned into, with subpoints, about 80 points of data. Right. And so one of the big arguments has been, okay, well, the rule is here, right? And it's squared and it's 13 things. Our arguments were, and you should just keep it to those 13 things and don't expand it beyond what Congress's intent is. And so the argument of congressional intent is why Congress passed this resolution, right, to undo the rule, because it expanded well beyond the 13 points that Congress originally sort of required in the statute.
Unbelievable.
It's an interesting example of regulatory overreach beyond statutory intent.
And so when you look at the data points, obviously, that they're seeking to collect here, who is it that would own this data? Is it the CFPB themselves?
Yeah.
The bank regulators, or who?
Yeah. The CFPB, right? And I guess the CFPB this is an acronym for Consumer Financial Protection Bureau. That is a new agency that was set up by Dodd-Frank, right? That did not exist prior to Dodd-Frank. Sort of Elizabeth Warren's brainchild. And we've asked for years, as this rule has been talked about, what are you going to do with the data? How are you going to report the data?
Right.
Because we're really worried about if part of the data is an NAICS code, right? And part of the data is a census tract. And so if the bank's got to report that, the NAICS code in this census tract, and there's only one, right, of whatever that business is in that census tract, it's going to be really easy to figure out the finances around the business, right? And so we've said for years, you've got a real privacy problem with this data. And the Bureau sort of told us this fall in a meeting we had in DC, we don't really know how we're going to present it yet. We have to collect the data before we can determine how we're going to share the data. And that is, it's very troubling to me. Like you should start with the end in mind when you're writing a big rule like this.
Well, more importantly, what's the underlying purpose? It's pretty clear to me. It's to come back on these banks and say, well, you're not loaning enough money to this particular demographic, that your portfolio is too skewed to a particular demographic. And so you just have to toss out just common credit-worthy standards and say, no, you just got to go loan more money to people that fit into this demographic that's missing in your loan portfolio. That's a recipe for disaster.
So, the intent of ensuring there's credit availability to all demographics, we think is a good thing, but the execution of this rule is so much bigger than it had to be to do that, right? Like, we're in the business of making loans, right? Like, so the banks want to make loans. They don't want to walk away from loans. And I hear the bumper music, so I better stop.
Yeah, well, we if you got time, we come back and continue this discussion, and that I wanted to also dig into just your overall outlook on the economy. Jamie Dimon hadn't given us too rosy an outlook here in the last couple of days. Wanted to get your thoughts on it and see how it's going in Mississippi. Can you hang with us?
Yeah, absolutely. Thank you.
Okay. Yep. We got Gordon Fellows, president of the Mississippi Bankers Association, on midday. Stay with us. Well, studio, Gordon Fellows, president of the Mississippi Bankers Association, our guest. So, Gordon, we were just talking about this possible new rule. And again, my concern is, what's the purpose? Why is that? Is this information, this demographic, personal profile sort of information? I thought we were supposed to be non-discriminatory, so to speak, with respect to lending practices, banking practices. This is almost calling attention to it at a minimum, but more importantly, I just get concerned that government steps in with this data and starts going after the banking industry, in some way asserting that they're racist or discriminating in their lending practices, where in fact that may not be the case. Perhaps the applicant just didn't meet the standards for a loan.
Yeah, there are a whole lot of laws around what's called fair lending, right, to ensure that everybody has fair access to credit, and we recognize how important those are, and our members do everything they can to comply with all of those. I hear everything you're saying on that, and I worry about that too. I mean, the fact of the matter on this, right, is that Section 1071 is part of the statute of Dodd-Frank, and so they've got to do something. Right. Eventually, some agency, the Bureau is going to write, or the CFPB is going to write the rule. Right. So, my real concern isn't, I don't think there's a realistic opportunity for Dodd-Frank to be amended. Right. And so my real concern here is that, the rule is out there. Did the Bureau stay within the bounds of what their regulatory authority is and the way they wrote this rule, right? And so, otherwise, we got to live with it, right? And we'll find a way to live with it, right? I mean, that's what banks do. They deal with regulation, but there is going to be an impact on speed of decision making for customers, and there's going to be an impact on the cost of credit, because this is it's not a cheap rule to comply with when you've got to gather all this data, right? That you're talking about either hiring people or buying new software, and so there are going to be real world cost for this, and the Bureau has defined a small business for the purposes of this rule as a business that has $5 million in income annually or less, right? That's a pretty high bar in Mississippi, right? That's a little bigger than what I think about as a small business. So when you think of a $5 million business in Mississippi, that's like, according to NDA, 116,000 businesses that employ 900,000+ people. We got a population of around 3 million total. That's not working age, probably, that's total. And you got almost a third of them that work for a business that this rule is going to apply to, right? And so when those businesses need a quick credit decision, right, like when they need a fast, tailored for them, that's going to get a lot harder now under this rule. You're right to be concerned about it, and I guess my message to business owners and folks that work for small businesses: start talking to your banker now about it, because it's going to change the mechanics of how credit is extended.
Well, as the business person in me always thinks, okay, if I'm going to collect more data, if I'm going to impose new rules, procedures, processes on my staff in my business, which is essentially what the government's doing to this industry, what am I getting in return for that? What's the benefit? There needs to be some benefit to that cost, because there's definitely a cost, as you point out, and there's a real monetary cost, and then there's, of course, just a convenience cost and delays, which could cause downstream problems for the borrower, as you well know. Sometimes these things happen, and they're kind of in a hurry. And having that relationship with your bank and being able to make those transactions occur man, it's invaluable. I personally been through that in my business career. So I just wonder, what's the benefit here? And I haven't seen any statements from the CFPB that says, okay, this will fix this problem. This will solve this issue. I don't see that.
Yeah, well, and you're right. That is really my concern in the big pictures. What is all this going to do for the small businesses that are critical to the state's economy? It's going to be a real hurdle for an awful lot of folks. And so,
Yeah.
but to your question of sort of what's the benefit? Well, Congress put it in the statute, right? So yeah, there's a question for Congress in that too, right?
Yeah.
And so
Unfortunately, they don't think like that. They just make laws without thinking about that, unfortunately. Jamie Dimon, I talked about that before we went to break. Of course, he is the CEO of J.P. Morgan. If it's not the largest bank, it's in the top 2 or 3, right, along with Bank of America.
Right.
And he's a person people pay attention to in business, and certainly the banking industry pays attention to him. He's a pretty wise fella. And he said that we may be looking at a downturn, a significant downturn in the economy next year. He's just warning that folks are running out of a lot of the excess COVID money and, of course, the quantitative easing that the Federal Reserve embarked on during the COVID. He calls that drugs being directly injected into our system. I think there's some truth to that. We're starting to see some slowdown in consumer spending, certainly some choices made by consumers on how they spend their money that are affecting various industries. My question is, what are you hearing in Mississippi, Gordon? I know you've got your touch on that with your members. What are you hearing from them?
Well, a couple things. So every quarter, the FDIC issues what's called the quarterly bank profile, right? And they sort of roll up all of the aggregate data from all the commercial banks in the country and sort of roll it out. And then you can break it down by state once it rolls out. And that came out last week. And our read on that was that Mississippi is in a pretty good position relative to the rest of the country, right? Nationwide, you've seen bank deposits decline. In Mississippi, bank deposits are still going up. Nationwide, you've seen credit metrics in some places, I don't want to say deteriorate, but there's some of you can tell there's some strain on some of the credit metrics. We haven't really seen that here in the quarterly data yet here in Mississippi.
Okay.
So, but when I talk to members, I think everybody is aware that, 2024 may be a year where expenses get strained. And, so I hear it in the context of, well, if the Bankers Association holds an event and I send, 3 people, I may only send 1 person now, right? For the next couple of months, just until we get a better sense of how the year is going to play out. That's kind of the way I hear it. I don't hear it in terms of credit availability or anything like that. So I know that's on our members' radar, right? And the big question, as you well know, is sort of what's the Fed going to do with rates? Are they going to keep them at the level they've been at? I feel like they're done raising, but I mean, we had a Fed governor at one of our events in the fall, and in that event, there was some conversation about, we may not be done raising. So don't think we are, so, I mean, but we've had a lot more data come out since then too. And it's certainly all that data sort of points to, where things are, maybe things are headed to an okay direction. You hear that term soft landing all the time. One of our members, John Hairston, who's a CEO of Hancock Whitney Bank, on his third quarter earnings call, he used the term safe landing. It appears we're headed to a safe landing. And I thought that was a pretty good term, right? I mean, it may not, we don't really know what a soft landing is, but if we can get the plane on the ground without everything breaking, then we'll all be okay, I think. So it feels like we're headed that way, but there's uncertainty to be dealt with still.
Yeah, he also did, Jamie Dimon. He pointed to weakness in China. Of course, bigger concern for a bank such as his. It has a lot of customers, of course, that do business in China. Maybe not so impactful in the state of Mississippi, but as well, though, that the macro economy, of course, it kind of influences Mississippi's economy to some extent as well. The good news, I think, I've always felt like this about Mississippi is we don't have any particular industry concentration. We have a fairly diverse economy. Agriculture you could possibly point to as being somewhat of a concentrated industry in our state. But overall, we're not as subject to the really super increases and the super decreases, the ebbs and flows, if you will, in the economy.
Right, and our banks are really conservative and focused on the long term, right? We don't have a lot of quarter-to-quarter banks. And so, we got through the 2008 housing crisis. We didn't have a single bank failure in Mississippi. We're one of the few states that can say that, right? Our bankers are very careful about how they make decisions, and I think that helps keep our economy stable, too.
Good to talk to you, Gordon. Appreciate your insights there. You have a great holiday, a Merry Christmas. See you later, man. Thanks.
Thank you. Merry Christmas, sir. Thanks for having me.
We're coming right back in the Element Wealth Studio.